Bitcoin has experienced significant growth recently, and I've been receiving lots and lots of questions from people, from FOMO chasers to high net worth individuals, about my thoughts on it. So in this video, I'm going to cover what's happening, what I think is going to happen next, and how I'm approaching it personally. And I'm going to show you the charts and break down the price movement for optimum entries. And I'm going to show you what I'm looking at. None of this is financial advice, and no one should listen to anyone or copy anyone else when it comes to investing your hard-earned cash. So enjoy this video as entertainment only. Let's go. All right, so since Trump was elected, it has triggered a bull run that all Bitcoin hodlers were waiting for. But there's still lots of people on the fence, and most people don't even understand a thing about what Bitcoin is, and most people think it's a huge risky asset that isn't even real. Well, I've been buying Bitcoin since 2018, and since April this year I've been buying very, very frequently every single month, and I'm not the only one. There's MicroStrategy, right? CEO Michael Saylor, he's been a prominent corporate investor in Bitcoin, and as of November 11th 2024, that company holds approximately 279,500 Bitcoins, and the average acquired price, the purchase price, is about $39,200 per Bitcoin. So they hold about $9.91 billion of Bitcoin. And notably, between October the 31st and November the 10th, 2024, MicroStrategy have purchased an additional 27,200 Bitcoins for, wait for it, $2.03 billion, averaging $74,463 per coin. For the first time ever, Bitcoin's price has recently surged past $90,000, reaching a record $93,158 on November the 13th, 2024, which was a couple of days ago from this recording. That is a 32% increase since November 5th, when the election was, and all of the investor optimism that's come in from pro-crypto regulatory environment under Donald Trump's administration. Then there's the ETFs. The approval of Bitcoin's exchange-traded funds has attracted unbelievable amount of institutional investment. All of the funds collectively managing nearly $94 billion. BlackRock's iShares Bitcoin Trust alone holds $42 billion. So this indicates a growing institutional interest. Globally, we're seeing significant cryptocurrency activity. And what will happen is Bitcoin will become more scarce, and only people who have done their homework, or rich people, will buy the majority of it. So as the supply decreases, its price will skyrocket. Trump using it as a reserve currency to the dollar, banks getting on board, institutions buying more, millionaires and billionaires buying more and more. There simply isn't enough to go around. So if it scales the way that Michael Saylor says it will, and let's face it, let's be honest, that guy has a lot of balls on the line here, then just by owning a fraction of a Bitcoin could be life-changing just 5-10 years from now. And owning an entire Bitcoin could put you in the world's top 1% wealthiest individuals as of today's standards. So let's take a look at some charts now and see what's going on. All right, so we're going to start with looking at a chart of the price of Bitcoin. And at the moment, everyone's seeing this, right? Everyone's seeing the 30% increase in price over the last couple of weeks at the time of this recording since Trump's election. And the thing is, a lot of people are really tempted to get in right now. And this is where emotion starts driving investment decisions. And that's where you become a little bit unhinged. And when that happens, it can just completely fog the mind of any rational decision making or logical process thinking or anything like that. And what happens in these particular periods is two things. People who now see this as an opportunity and now like, oh, do you know what? I missed the first one when people were talking about this. Then no one was talking about it. Now they're talking about it again, right? Now I should get in. And then they go, but I don't want to get in now. You know, I want to wait for it to drop a little bit so I can get in again. And then the drop might never happen. So then they've got this constant gut-wrenching FOMO that keeps them out of these opportunities forever, right? But in reality, if you just zoom out a little bit here, right? So you guys know, I've been speaking openly about this for a long time. I'll show you guys if we go out to the monthly time frame. Right, back in 2018 was when I got my first setup, right? So you're looking at that here. Around October 2018, I posted a video which you can go and watch. I told you exactly when I was getting in, at what price, where I was not bottom picking, and where I was going to ride it to. I then came out in January. You know, I stupidly took some profit off in January, put it back in February, and I made, you know, I've kept that in ever since. And then in April this year, I started buying monthly. So a Bitcoin a month pretty much on average since April, which we're now in November. So, you know, 7 or 8 months or so, I've been buying a Bitcoin monthly on average. And when you look at this, it's like the old saying, when's the best time to plant a tree, right? 25 years ago. The next best time is now. Because what happens is, yes, we're in a bit of a rally, but it might not come back down from here, but it might. And that's where you've got to you've got to get the intersection right between your mindset and your automation process, your logical decision-making process with your investments, because you can automate this stuff and you can go, okay, I want to set and forget this much of my income every month. But then if you get that wrong with how your mind is able to cope with the allocation, that's not going to work either. I'll tell you what I mean, and then I'm going to show you exactly what I think. If you are looking to time the market and you're using technical analysis to get in, what might happen next with some degree of probability based on historical behavior, because what we're looking at here is a chart of human behavior, right? Never forget that. This chart isn't just ones and zeros. It represents human decisions, human behavior around this asset, which is really powerful and a crucial thing to remember. So before I get stuck into that, let's just go over to the S&P 500, right? All these red things are the crashes, recessions, and things like that, right? What most people say is, well, I want to get in. And they get in, right? And they get FOMO. And then when it booms, like it did back here in the .com, they go, oh, it's too high now, you know, it's not worth getting in. But the problem is you're never going to want to get in, because when no one's talking about it and it's crashing, you're not going to want to put your money in if you don't know what you're doing. And then when it's booming, it's too late, because you only want to put it in when we're already at the high. Okay. And then you never want to put it in when we crash again, and you want to put it in when we're booming, but then you think, oh, it's too high, it's going to crash again like it did before. And you end up never getting in because you don't know what you're doing and your emotions are running that decision-making process. The flip side of that is when people start learning about things like dollar cost averaging or advanced dollar cost averaging, which I've done many videos about, is where they go, oh God, I should have done this earlier, and I wish I'd been doing this a long time ago. So from now on, I'm going to put 20% of my income into investments, or 30%. I'm going to put as much as I can. And what happens then is it's not sustainable. So you find like 3-6 months down the line, you can't afford to do that, and now you need to pull some money out, and that jeopardizes the whole strategy of approximating the mean growth of the market, because you're now breaking the system. Does that make sense? So that's where your mindset, that intersection between your mindset and your your investment process, decision-making process, need to align, because if it's not, then you're going to break either way, if that makes sense. So let's take a look at Bitcoin, for instance. So everyone's seeing the recent rally. If you zoom out, you can see that it's just another bull run, okay? And it's another bull run, and people might be thinking, well, okay, it might come back down. Well, this is where we just put on your trader hat for a minute. And if you're thinking about, okay, well, maybe we can see a little dip and I can get a bit of a better price. If you're thinking about dumping a load of money in right now, because like I literally bought 2 about 6 weeks ago, and I bought them for 42,000 each. So I spent 84,000 on Bitcoin about 7 weeks ago, and now we're up around. There's about 60 grand profit on or yield on top of that. It's not a profit until you take it, obviously, but just those 2, it's crazy. But we are at a bit of a bull run high-ish. I'm not saying this won't go on. I believe this is going to go much higher, and I'll explain more about that towards the end of this video. But what we're seeing, and this is what we know based on technical analysis, right, is we've had a compression channel with a breakout. This is human behavior. And if you see, it happened here, it happened on all of the historical breakouts, happened here, happened here, we had the dip and the breakout. all of the previous breakouts, the major breakouts, they compress and then they break out, right? So you don't actually get a bear run, a bear rollover. You just get consolidation, and the longest period of consolidation was from early this year through to now, and you could arguably say that from lockdown in 2021 to 2020, early 24, we were in a big, broad range of consolidation, and then we broke out, and now we're breaking out again. And what you're seeing is a massive bull run, right? Now, this is where you see things like retail jump on really hard. Retail investors, they're just going hard at it. The FOMO's kicking in. More and more people are getting educated on it. More people want to run in for the ride. More people are seeing the returns that it's making, and more people are jumping on. And that's where you start to see the acceleration of this take place. But it's also human behavior to start seeing people having a sell-off, because people, in hindsight, it's great. In reality, think about it, right? You've just watched, if you had one Bitcoin and you didn't know what you was doing, and you just put 30 grand into Bitcoin, 40 grand into Bitcoin, bought one Bitcoin, say, and then all of a sudden you see that go up 30 grand, that's great. You might take that out. But actually, do you even think that you'd get it to 30 grand before you took profit? Knowing what's happened over the last 4 years, you might think, well, we're up 5,000, we're up 10%, and we're up 10% now. I'll take a 5 grand profit, and you take it off, and then it goes up again, and you think, oh, I should have left it all in, I should have. So if any of those decisions, or if any of those emotions, or you're asking yourself any of those questions, you really shouldn't be in it. You really shouldn't be doing it, or you've allocated too much of your total liquidity to this asset class because it's affecting your emotions, right? Now, if you are a trader and you see this, because we know this is human behavior, I know this particular pattern represents human behavior of a bull run, and we're likely to see a bit of a sell-off. And what we're seeing is an overbought condition. This is what an overbought condition is. And you can see that we're starting to decelerate. The speed in the transactions is starting to slope off, where it's fast transactions. Now it's starting to slope off. Now we're starting to see some deceleration. Now we're starting to see some rejection around 91,000. Okay, I believe it's going to go to 100,000 before January. And I believe it's going to double by the end of February 2025. Okay, now this might not age well, but you know me, I've always been known for putting out not hindsight content, but my truth. And sometimes I'm right, sometimes I'm wrong, but that is what I believe with this. It's going to double by February 2025. And in February today is the 14th of November, 2024. And by the end of February, by 28th of February 2025, I think this is going to be sitting around $140,000 mark, okay? Or $150,000 mark. Sorry, I'm thinking in pounds. So it'll be around $150,000, $160,000, £140,000, okay? So there we go. Mark my words, it's out there. If you are desperate for a pullback and you're looking, maybe you can get a better price, then from a technical standpoint, there are good odds that we're likely to see a slight dip before another rally. Now that dip, it might be like this, okay? And the worst case scenario, we could dip right back into these resistance levels here, down at $72,000. So it could go down another $20,000 essentially. Or what we might see as well. So there's two scenarios that are likely to happen based on my knowledge and my expertise in historical data analysis based on human behavior and market patterns. And I've been doing it a while. We're either going to push down to here, or we're going to see another compression channel like this, right? And what normally happens with Bitcoin, you see a final dip down and then you see a rally. So what you see is these kind of compression channels. You go back to my first video I did on Bitcoin, you see something like this, and then you see a dip, about a 20% move of the dip, and then a 50% rally to the high. So that's what we're likely to see. Okay, and this is what I think is going to propel us into towards that 150,000 mark next year. So That, from a technical standpoint, and hopefully you can see about the dollar cost averaging side of things, and being able to allocate a portion of your income or your liquidity or your allocation to this, that is going to play in line with your mindset as well, so that you're not quickly, because it's very, very volatile, right? So that's the technical standpoint. Now, just quickly flicking back to the S&P 500, at the same time, you don't want to be over infatuated with Bitcoin, because look, there was a lot of smart people back in the dot-com boom who were reading the Financial Times and well on top of all of the analytics and thought they knew what they were doing. And they were smart people out of university, and they had degrees, and people who had huge financial degrees were ploughing their money into this market thinking this would never end. And they became infatuated with the idea, and they lost a lot of money. Lots of them went bankrupt, bust, all sorts of problems, lost their shirt. So you don't want to be on that side either, where you're so infatuated with this thing that you're ploughing everything you've got into it. Having said that, talking about the dollar cost averaging thing, I've done studies where people try and time the market. Okay, so I worked out that if you time the GFC perfectly and you got in just on the low, right on the lowest low point before the recovery, you would have less. If you put regular deposits into the market and you did dollar cost averaging till today, you would have less money than had you started investing right before the crash by dollar cost averaging. And that is the magic of dollar cost averaging, right? Because you are buying on the way down, buying on the way down, buying on the way down, putting more and more chips in the game, and you are going to approximate that mean growth more, and you'll end up with more money than you would had you picked the bottom and started. Now, yes, you could dump your life savings into it at the bottom and end up with more money. No one's actually really going to do that in real time. As I say, you have to think about, it's not shoulda, woulda, coulda. It's not hindsight. We don't have hindsight. We just have what's happening right now. And that's very unlikely you're going to be able to do that. All right, so just for some final thoughts on consistent strategy and long-term planning, I believe Bitcoin is going to grow. And as I've explained to you already, you won't be able to benefit from that growth if you don't understand what you're doing. And most importantly of all, you need to keep your emotions in check. Use automated systems to maintain discipline and have a clear long-term investment strategy, and know how your allocations in certain asset classes might affect the volatility in your total liquidity or your total net worth, so that you can tweak the allocations to be more sustainable and you're able to manage them mentally. Never grow your investment portfolio at a rate that your mindset can't keep up with. And on that note, I'll recommend checking out my 7-day wealth training, which I'll put the link in the description, and also some of the other videos on this topic on this channel. And until next time, be smart, and I'll see you in the next one. Take care.